Welcome to Illuminati Silver. We tell the truth about silver. Today is Monday, the 30th of May, 2022, and a happy Memorial Day to our colleagues, subscribers and friends in the United States of America. The reason for the video today is oil. We are seeing oil prices rise, and if we're not careful, we could very well see those prices move to $130 and even $140 a barrel. Why? A number of reasons which we shall explore in this video. And if that does happen, unfortunately, it could derail any potential for global recovery. So without hesitating a moment further, let's take a look. Bloomberg article dated May 30th. Headline: France tells Tehran to release seized oil tankers. France said Iran must release 2 Greek-flagged oil tankers seized in the Persian Gulf last week as tensions between Tehran and world powers mount and nuclear talks stall. The ships were detained by the Islamic Revolutionary Guard Corps because of what it called violations. The move may have been a reaction to Greek authorities, in coordination with the US, confiscating a Russian-flagged vessel for allegedly carrying sanctioned Iranian oil. One of the ships seized in the Gulf, the Delta Poseidon, is a Suezmax capable of carrying more than 1 million barrels of crude. Robert Malley, US President Joe Biden's special envoy for Iran, said last week that the prospects for a revival of the 2015 nuclear accord with Tehran are tenuous at best. Negotiations have made little progress in the past 2 months, with one sticking point being Iran's insistence that the IRGC is no longer classified by the US as a terrorist organization. The ability of tankers to move freely through the Gulf is essential to the global oil trade, and this is the important thing to note. Tankers hauled almost 21 million barrels a day of crude, or a third of world trade, through the Strait of Hormuz in 2018, according to the Energy Information Administration. Brent crude climbed to around $120 a barrel, extending its gains this year to 54%, as China eased coronavirus lockdowns and the European Union continued to work on a plan to ban imports of Russian oil. A nuclear deal may bring 500,000 to 1 million barrels per day of Iranian crude back onto the international markets, enough to weigh on prices. The 2015 accord, which then US President Donald Trump pulled out of in 2018, limited Tehran's atomic activities in return for the easing of sanctions, including on oil exports. And so if we take a quick look at what's happening to oil prices, we can see that WTI crude is up 86 cents at $115.93, and Brent crude, as the article suggested, is up 81 cents at $120.24. Now, stocks this morning have rebounded, mainly thanks to the rise on Wall Street on Friday, which we mentioned in our weekly update, and we can see Asia Pacific stocks overnight, and that market is now closed, is up on average 2%. For the Nikkei, Topix and Hang Seng indices. UK and European markets are also up, not quite to the same extent, but we have the Euro stocks up 1%, the FTSE, the DAX and the CAC up between 0.5% and 1%. Now, gold prices have actually responded quite well this morning, and they are up, really following through to some degree on Friday, and we can see that gold is currently $1,860 an ounce. Silver's not fared quite so well, but it hasn't fared badly either. You can see from the chart that prices initially fell, then rose again, but have fallen back and are on a slight ascent again, but leaving the price of silver currently unchanged. Dollar index is 101.52, just marginally down so far today by 0.15, which is part of the reason for the rise in gold. Let's now talk a little bit more about oil and what is going on internationally, which can further affect prices. Now, we have seen stocks, that's equities, gain in the last sort of 24 hours, meaning overnight in Asia and Europe and UK this morning, with the Dow doing very well, the Dow, the S&P and the Nasdaq on Friday. And part of the reason for this, it's not the sole reason, but part of the reason is that the China virus is easing. And so gradually China, which has been to a large extent in certain cities, almost in full lockdown, are now opening up again. And that, in theory at least, will spark some increased, shall we say, activity in global markets. And Bloomberg stated today, and I'll just read it, it's very short, stocks and US futures advanced after China eased some virus curbs and Wall Street had its best week since November 2020. Euro area bonds tumbled after inflation prints surprised to the upside. A fourth day of gains for European equities extended their longest winning streak since late March and drove the Stoxx 600 index to the highest in more than 3 weeks. Luxury stocks outperformed Monday as China's reopening plans boosted sentiment. The dollar slipped for a third day versus major peers as havens lost their appeal amid the improved mood. Oil climbed in response to the easing of Chinese lockdowns and as the European Union worked on a plan to ban imports of Russian crude. And, of course, because of the uncertainty caused by the seizure of these various tankers. And this is an important point to bear in mind. We have a scenario whereby trade has been curtailed due to Chinese lockdowns. That in itself has caused problems in terms of supply of things like microchips, which affects most of the technology industries around the world. Further add to that, and perhaps more impactful short term, has been the Ukraine-Russian scenario with a number of bottlenecks occurring. But then you can add further. We've had inflation being caused as a result of some of these things, also as a result of vast money printing, too much money chasing now too few goods, and also to some degree, and we're experiencing this in the UK, but I'm aware it's happening elsewhere. A lot of people who've been involved in the last 2 years in lockdowns are starting to change their life profiles. What I mean by that is, whereas perhaps they had a certain job, they've now decided, you know what, actually working from home is nicer than jumping in a car, spending an hour in traffic congestion, going to an office, meet people that perhaps you may not like, and then do the same return journey back every day. Because of furlough and certain incentives, some people feel, well, perhaps it's better to live on benefits than it is to go out to work. In other words, the extra effort for the work isn't compensated for enough by the amount of money that one receives. And that's concerning too. Added to all of that, we have the prospect of even further rising inflation, simply because people's incomes are not rising in line with the cost of living, and therefore they're demanding higher wages. And we in the UK are facing strikes now by various transport unions, which will further exacerbate the problem. Where does this leave us in terms of gold and silver? Well, it means that the risk area is still not totally alleviated, although China opening up will increase the amount perhaps of gold and silver demand by China, which should help raise prices, but at the same time reduces the level of risk in the global economy, and therefore that will have a dampening effect. Now, on the weekend, we highlighted where we believe gold and silver prices are going to go this coming week, and we've expressed the fact that until we see what the Fed is going to do in the coming weeks with regards to interest rates, it's extremely difficult to predict which direction precious metal prices are going to move in, though our own personal view is that they're likely to be under pressure and potentially fall. However, if the Fed alters course because it believes that raising rates too rapidly could be detrimental to the economy, then of course, if they don't raise rates by 0.5% at the next meeting, we could see a further hike in gold and silver prices, though we're not expecting that to happen. The major concern we have at present, and it's almost an immediate concern, are oil prices. Unless this situation resolves itself, we could very well see oil rise into $130 or $140 a barrel. And if that occurs, then inflation will commensurately rise, and that will force central banks to become even more draconian with regards to interest rates. So this oil crisis, and this is the verdict of this video, the oil crisis scenario is a major determining factor which will affect precious metals and other commodities, and also to some degree, if not resolved quickly, will direct central banks to adopt a harsher, more hawkish position than many of them would really like to see. Thank you so much for listening. If you haven't subscribed to the channel, please do so. Kindly give us a thumbs up and press the bell sign so you're notified of videos as and when they're published. And we'll be providing an update later this week, simply because there's quite a lot of economic data due out. Today is Memorial Day in the United States, and we wish our United States colleagues well. And later in the week, and particularly on Friday, we have the non-farm payrolls report. Till our next video, have a great day. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.